Supposedly. Let's see if YouTube catches up with that. Because I like to stream through some software. And I think I'm going to go check really quickly. I'm just going to go see if this live stream in the control room is live. Excellent. We're in excellent condition. Awesome. I'm going to make sure that all the tags are there. Oh no, really? Okay, I'm gonna pick a thumbnail here. Let's pick a thumbnail. I should have done this before, shouldn't I have? Well, that's okay. I think I've got one that is kind of old. I wonder if I could find it. It's kind of ridiculous, but maybe I won't do that. Here, we'll just use this one again. Reuse that thumbnail. And why don't I see tags? Can I see tags, please? Description, streaming stop, okay, public, blah, 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 category, thumbnail, playlist, whatever, audience, blah, 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 blah. Oh, there are the tags. The tags worked. Okay, hitting save here. And, okay, switching focus now and getting out of the control room. I don't want to run down my bandwidth there with the stream. And I've actually got the plugin working for the chat, which is going to help me keep track of the chats better. I really don't want to miss anything anyone's saying. I want to interact as much as I can. I'm just going to move some things around on my second monitor here. And let's go. Okay. Nobody's here yet, which is just fine. That's great. Gives me a second to like put my glasses on and such. And start looking through here. Whew. Okay. Let's do it. Let's look at some charts. Looking at some charts. And I don't think I really need to go over AMC right now. If there's no... Oh, we got some viewers now. What's up, you guys? I'm going through AMC at the moment. Looking at how we've broken down. This morning on Twitter, I tweeted that we've got like a 60 odd percent chance, 58% chance of a pullback into the pattern. We did that. Makes me think that maybe the pattern actually might look like this, which is annoying because then of course there's going to be like more time for sideways grind. Not great. And this also would make my ABC waves here a little questionable, but maybe also it's okay. This is too low. Very possible though that we're just going to go through an ABC move here, and this is another ABC move, and we're actually going to keep going up through the pattern. This is kind of what I'm thinking. Let's see here. We could do it. Yeah, this could continue to grind sideways. Dumb. Originally, I had that shown here, and you can see now we could leave this here and interpret that the price is spinning on that trend line. That's fine. Of course, I don't want to use this point exactly for the pattern, but you can see that this trend line would be a little better. So I could easily just drop this down and say that's, you know, it just looks like it's going to go on for a little longer than I anticipated, which is fine. Not every breakout is going to hold. The reversal for that breakout would have been this level right here, 431. Breaking above there kind of confirms extension. So we're gonna write that down. We're gonna leave a little note for ourselves here. 721. Whenever I make like notes on live streams, I need to like write it down because otherwise it's just gonna be, I'll forget about it, and that'll be great. 721, 23, sideways confirmation. There we go. Just gonna leave it here somewhere on the chart. Don't know what that line's doing there. So a little update there on AMC. Let's go check on GameStop as well. GameStop making a breakout below 2270, and this one held. Yep, sure did. I think I could clean this chart up a little bit. I kind of like where this trend line is. I'm going to leave it there. This downward breakout, I'm going to zoom in here, and we'll get a look at this maybe on the 15-minute time frame. Maybe we're starting to get a motive wave through here. 1, 2, 3, 4. Looking for wave 5. It could be a truncated 5, and now we're coming up for the reactionary trend. This is actually a great example. Let's open up a new chart. Let's get a new chart going here. And is blank actually blank? That's the question. No, the blank chart is not actually blank. Create drawing set. Okay, we'll say now this is the actually blank chart. You see what I'm doing here? And then this chart won't be blank. because I won't delete the drawings, which is, you know, whatever. All right, let's see here. On the daily time frame, we're looking at an uptrend through here, which broke very cleanly. I'm gonna go ahead and give this a long green dashed line. And if I zoom in on the hourly time frame, we can see the pennant that I was following earlier. And it's not a good pattern there. Nope. I mean, this could be the pattern. It could just be that we're moving through this awkward pennant in this really weird spot. Really weird spot to do this. It's confusing, and maybe we're just going to do this. Maybe that's going to be where we're at for a minute. 1, 2, 3, 4. 1, 2, 3. 1. 1, 2, 3. 1, 2, 3. 1, 2, 3. It's interesting. I don't think that a pennant really works here. Makes me think that we're probably looking for a series of motive waves. This is probably A, B, and C pointing down now. I'm just gonna hypothecate. That's a good word. 2074. Test the level of support down here. Perhaps, and if that's true, this is 1 and this is 2, and we're building wave 3. 1, 2. Yep. Okay, that's what we're gonna operate on right now. We're gonna make the assumption that we are moving through an ABC wave, which is corrective. And lately, I've just been saying this a lot of sideways grind. I think we're gonna have to get really used to this. The markets in general are just gonna be like going sideways for a very long time. Let me do a thing here. I just want to make sure that this works. I'm gonna just test the what do you call it? The plugin. I got a plugin working right now for the chats through my streaming software. Yes, it does work. Okay, cool. Nice. Let's go ahead and let's just try to figure out what wave degree to start on. It's important because I don't want to accidentally wind up at the sub-minuet degree and then have to express an extension. And I want to go in there and really digest these very small waves through here. This would be, let's draw this trend. This downtrend, very small. And I think it's the, wow, it's probably 1, 2, 3, 4. Could that be 5? Nope. This is 1, 2, 3, 4, 5, probably, right? 1, 2, 3, 4, 5. Yeah. This could be A, B, and C too. This could be a big extension, but I don't think so. I'm thinking that we're probably looking at waves 1, 2, 3, and then this can't be wave 4 because the price passes this initial impulse, right? So this has to be A, B, and C as well, which is interesting. Perhaps, I wonder if this is actually our corrective pattern. A, and then we have A, B, and C. So we get like this expanding flat through here. And then we go 1, 2, 3, 4, 5. A, B, C. And then we start our next 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. Giving us that funny channel look in a motive wave. That's very possible as well. What's going to be the most appropriate analysis? That's the question. Well, it looks like we came to the bottom here and we broke below that and then came up, which means that this motive wave was interrupted. So it's probably actually A, B, and C. And this is probably where that pennant actually is. Tricky, very tricky wave B. Let's see here. And if that's the case, then this trend line goes right here. We start wave B there and come up through here. And is that really going to be wave B? Kind of a funny thing, right? But we do have 2 consecutive trend line touches, so A and B with a strong C wave, and then we come up. This looks like one wave, but maybe B and C, again, consecutive trend line touches, and then we have A, B, and C. So 1, 2, 3, 4. Maybe this is a failed 5th touch. Nope, not on the 15-minute time frame. On the 15-minute time frame, we actually got it. This is the actual pennant right here. And this is good. This is really good because now I know that these that this wave has 3 waves in it, and this is all part of one larger wave. So I'm going to need at least 3 degrees up, which would be subminuet, minuet, minute. We're going to go up to minor. We're going to bump it up 1 extra level, give ourselves a little wiggle room through there. So at the minor level, we're calling this wave B. All right, and yellow's the right color. Going to go to A, and then the C target is 2076. We're going to extend that to the right because it's going to happen somewhere out here, obviously. Going to just guess. Let's do a little time frame analysis here. How long was it to the bottom of A? That's a floating box. I got to pull down 226 bars. Okay, and then how long has this triangle been? To the breakout. Oh, almost twice as long. Interesting. What if I break it down just the start here? It was 717 to the first touch point, 558. It's kind of comparable. It's never going to be like perfect, right? And it's possible that this is part of a larger time sequence. Time sequencing is something I'm going to get into too with Elliott wave. You can do that. Frost and Pretcher grow over it. I don't really get it yet, but I will. I haven't actually studied the book in a bit. I keep looking over at it. It's this guy right here. Good stuff. Very confusing. Very hard to read. Let's just take a look now at this pennant, and we're going to start breaking down these waves. We're going to start with this A wave through here. Let's zoom in on it. And I'm going to remove... I'm not going to remove this drawing. Rather, what I'm going to do... I can't hide the extension curve and the trendline curve properties here, but what I can do is I can make them the same color as a chart background, and what that does is it just diminishes the overall visual effect. So it looks like it's not there, but it totally is. If you look really carefully, it cuts to the price, but whatever. Effectively, it's not there. So the highest high, right here, this is not going to be let's see here, a second wave, right? This first push down can't be impulse because of this wave retracing all that progress. So we have to start our motive wave count back here. I'm gonna look at the RSI. I'm gonna see where we're oversold because that typically gives us where our motive waves are peaking. And so here we've got oversold and oversold, and there's no bullish divergence here. So this is probably wave one, and then we start a third wave extension. 1, 2, 1, 2. Let's see here. Okay, we're gonna get going. We're gonna blow this thing up, and we're gonna pull this down, and we're gonna draw the trend line because that's always very helpful. So here's our first very small little downtrend, and we're on the 15-minute time frame right now. So this is very micro. And this is, let's see, June 15th. So this is several weeks ago, but 1, 2, 3, 4, and 5. So this is a 3 and 5, and there's no bullish divergence here. Pretty bearish, right? There's a big correction there for wave 2. I'm gonna give wave 2 a label through here like this. And I'm doing it in blue because I can see the A, B, and C waves that compose this. And I'm gonna do that here. I'm gonna just label that point A, B, and C. So those 3 yellow waves build into that blue wave. And then we're gonna be labeling that whole correction in the next degree higher, which is minuet, which I will also make blue, so it matches. There you go. A, B, and C of B. There you go. If this is 1, then this is actually 2. Whoops. Of course, we always start in corrective mode, right? We always start in corrective mode. And you're going to see that this is basically waves A, B, and C. And then the failure to rally creates wave 4, and wave 5 gives us that progress. Hence, motive waves have 5 waves and corrective waves have 3. So you really make that flip between corrective and motive at the reactionary trend to the impulse, the last impulse of the initial reactionary trend. So you are just going back and forth, back and forth, back and forth until one fails, and then you pick your next trend direction. AMC Mooning Monday says Namal Tino. No diarrhea today as well? Nice, a win in my books. Yeah, every day you don't have diarrhea, that's probably a win to some extent, you know? Pat yourself on the back, I guess. Let's see here. Let's just go take a peek at AMC really quickly. if AMC were to break out of this pennant, then we would be putting a bullish price target down somewhere on some level. If it were bullish, it'd be 1 2 1 2. Let's just do this. If you want to see a bullish target on AMC, you need to break this pennant, right? And then you're going to have a series of third wave extensions through here, and that's what that would look like. You'd probably, knowing AMC, you'd probably like fly to 496, plummet down to 462, and then push higher to 509 and get the classic meme stock top through those levels. So if AMC is going to make a big move up, then that'd be why, or that's how it would form, I think. And there's other things pushing AMC around, right? Like the legislation and all this, not legislation, the litigation. Apes breaking down. I was anticipating this breakdown in Ape, by the way, so I'm not surprised by this at all. Actually, this looks like it's going more per my analysis than the hype. Again, AMC had a pretty big run up today, but then it just fell right back down. Fortnite this weekend. Yeah, let's do Fortnite. If you've seen in the Discord, I've actually created a couple of different channels for Fortnite, so we can definitely do Fortnite this weekend. Absolutely. Let's do it. And maybe I'll tweet it out, and I'll do it at everyone in the Discord. Maybe one of my Fortnite buddies will join me as well. We'll see how it goes. Let's go back to GameStop. I'm breaking this chart down. I need to really tune this in because we're at this uptrend support. We formed this pennant. We're pushing lower. And so if I can go back here and like reverse engineer the way the price is moving, then I'll be able to speculate which way the price will go and how far. Maybe at some point I'll be able to do time frames better too. For right now, it's can't speak in the Fortnite channel. Okay. Yes, that's probably true right now. And that will probably be true until I'm online, and then I'll open it up for everybody. All right, let's go into this again. So we were talking about how we have an ABC push here, and then as soon as you get the failure to rally, then you push into wave 5, and that defines the motive wave. We've found the first impulse heading lower through here, wave 1, ABC, and then we start the beginning of wave 3. And this is something I want to go over really quickly before we move into that, is how we use the RSI here. You'll notice that there wasn't a bearish divergence between these two valleys. There was a bullish divergence between these two valleys. And so this is created between, let's see, the bottom of the motive wave and then the next low in the corrective wave. And it's possible that this is a corrective sharp through here and not a flat. And we'll be counting 1, 2, 1, 2, 3, 4, 5. Possible. 1, 2, 1, 2, 3, 4, 5, 4, 5. So this could be 5. This could be wave 5. This could be a sharp correction through here. And in which case wave 4 would be a flat. So let's just see if wave 4 is flat, because we want wave 3 and 5 to have that bullish divergence really, right? So let's see here. If we go 1, 2, 1, can that be 2? And then we have to extend. This is hard. Again, this is hard when you get these channeling-like moves. We're going to zoom out a little bit, get rid of some of that price data. Help us simplify the chart a little bit. If this is, we're looking for a wave 4 as a flat. 1, 2, 3. On the hourly time frame, we could call this wave 4 right here probably. If that's the bottom of wave 1, A, B, and C. Perfect touch there. And then 1, 2, 3. Can this be another wave 4 right there? Not quite. That's so close though. And then 5 pushes lower. Possible that this is wave 4 back here. Kind of awkward, kind of awkward. Let's do some trends here. We'll try to do the trend line analysis. If this trend extends through there, we're on the hourly time frame now. We've got 1, 2, 1, 2, 3, 4, 5, 4. You see how here we get on the hourly time frame wave 4 almost coming up, and this is a sharp 5. Okay, that's fine. So maybe I actually make this the bottom of the motive wave, and you can see that the RSI here is closer to forming some sort of divergence. Let's go back to the 15-minute time frame, zoom in, see if we can't get that to make more sense. So there's going to be multiple possible wave counts through here, correct wave counts. So it's something to bear in mind. This might actually be the end of wave 5. So let's do this. Let's still go ahead and delete these, because sometimes what we get at the beginning of a corrective cycle is actually a triangle, a diagonal, and those diagonals can signal further downside movement in leading diagonal triangles. And it's possible that this is actually a leading diagonal triangle. Look at that. Now, does that make more sense? Yes, that makes more sense to me. The chart pattern here is pretty clear. What we're looking for is an overlap between waves 1 and 4. And so if we have this overlap right there, that could be it, right? That really could be it. This could be 1, 2, 3, 4, and 5. And then that makes that the touch point. The chart gets even cleaner. Okay. There you go. Let's see here. 1, 2, 3, 4, 5. Interesting. You know, typically it's between opposing trendline touches you get that 1 and 4 overlap, but here this is actually wave 1 of the initial impulse, not necessarily the wave 1 of the full move across the pattern. So 1, 2, 3, 4. Oh. Maybe then what we can do is actually do this. 1, 2, 3. Wait. 1, 2, 3, 4, 5 doesn't quite come down all the way. We're going to figure it out. This makes sense too, doesn't it? We call this 1, 2, 3, 4. Yes. And here, wave 4 would overlap right there, and then 5 comes down. And we actually label this one in, whoop. There you go. Don't include that top. Try to offset your diagonals and triangles as much as you can. We're looking for a 5-3-5 pattern through here. This is definitely not motive. So we're calling this 3 and then 1, 2, 3, 4, 5. Yeah, we definitely have a leading diagonal triangle through here. We're going to go ahead and start labeling this one. So it is technically a motive wave, so we want to call it wave 1. And I'm going to make it blue and make it match the degree I'm drawing it on. So that would be touch point 1, 2. When it gets really difficult, sometimes it's good just to back out again, check a larger time frame, and then zoom back in and see if you can't find something that fits better. This was a good example of that, I think. This is 4. Duplicate again, 4, 5, which is down here. Okay, nice. Looks good. I like it. I'm not going to worry about it too much. Maybe it looks better on the hourly. Maybe it looks worse. It's kind of a small chart pattern. Doesn't look as good on the hourly. Zoom back into the 15-minute. Here we go. This is an impulse. 1, 2, 3, 4, and this can be 5. And then, I mean, it's possible that this is actually back here. And maybe we don't quite get that overlap. Very difficult. Very difficult. Maybe on the 1 minute it looks better. I'm not going to get enough priced out on the 1 minute. I'll have to generate like 2 months of 1 minute charts, which will take forever or just be frustrating. But I really want to say that this is the end of 1 back here. Oh, and this is where we offset the pattern, right? That's the offset. Curious. 1, 2, 3, 4, 5. 4, 5. There was a third wave extension through here. That's why it's like that. 1, 2, 1, 2, 3, 4, 5, ending 3, 4, and then 5. Got it. That's the right count. That's good. Kind of hard to get there sometimes. Your shadow banned in the Discord. What? Let's see. What's your Discord username? And I don't do any shadow banning, but there are a lot of permission controls in the Discord. And so if you don't have a role assigned to you, you'll have some restrictions there. Let me know. Go ahead and drop your Discord username in the chat there, or, you know, message me on Discord or something. I don't know if you can if you're not my friend. Somebody send a friend request or something. Get a hold of me in Discord and we'll figure that out. Okay, here we go. Leading diagonal triangle, right there. That's what it is. Leading diagonal triangle. We're going to call it false falling wedge. You know, a lot of people, they do chart pattern analysis and they'll find like any diagonal pointing such a way and they'll just be like, oh, there it is. And this is bullish. And it's like, it's not bullish necessarily. You need to understand that. This is a motive wave in for wave 1. 2 is corrective. 3 is motive. 4 is corrective. 5 is motive. And when you get those alternating motive and corrective cycles in a diagonal in wave position A, C, or 5, we need to be careful that we might have leading diagonal triangles or ending diagonal triangles. What if I can't just find this really quick? Frost and Pretcher go through it here pretty quickly, concisely. And I know that I've got some of these pages here actually tabbed. And this is why, right? Okay. When diagonal triangle occurs in 5 or C position, they take the 3, 3, 3, 3, 3, 3 shape. And that's an ending diagonal triangle. Let's on page 39, the broad chapter of the broad concept of the Elliott wave principle by Frost and Pretcher. I think I have to say that. Here we go. It has recently come to light that a variation on this pattern occasionally appears in the wave 1 position of impulses and in the wave A position of zigzags. The characteristic overlapping of waves 1 and 4 and the convergence of boundary lines into a wedge shape remains as in the ending diagonal triangle, which is the other one. But the subdivisions are different, tracing out 5-3-5-3-5 pattern. The structure of this formation fits the spirit of the wave principle in that the 5 wave subdivisions of the actionary waves communicate continuation as opposed to the termination implication of the 3 wave subdivisions in the actionary waves of the ending diagonal triangle. Analysts must be aware of this pattern to avoid mistaking it for a far more common development. Yes, okay, so that's what we're talking about right there. In wave position 1 or A, you get these converging trend lines, and if between opposing trend line touches, you have the alternating motive and corrective waves, then you form one of these leading or ending, or one of these leading diagonal triangles, which is totally what we have. And they say that this is a zigzag, actually. Zoom out. Does that look like a zigzag? That totally looks like a zigzag. Let's do a quick zigzag analysis here. This is just like A should be equal C here. Ooh, we don't quite get that, do we? No, we start a zigzag and then we immediately get arrested into a horizontal triangle, which typically happens in wave B, right? So if you're in a zigzag and suddenly you start going sideways, you're probably in a triangle, right? That's just the way that these price trends move. And it's something else Frost and Pretcher go into here in this book. I'm serious. Like, it doesn't take like a whole lot of studying. This is all in the first chapter. This is first chapter stuff of this book, and it's incredibly useful stuff. I wonder if I can find the page really quickly. It doesn't look like it, so I won't waste. Oh, here it is. It's right here. Horizontal triangle. Okay, cool. Let's see. Yeah, a regular triangle is what they're calling it here. Let's see. It's extremely common for wave B of a contracting triangle to exceed the start of wave A. Okay. In what may be termed a running triangle. And that, running triangle. This is what I'm trying to say is like you'll get the bottom of a wave and then your triangle will start, right? That's what I'm trying to say. Is you don't want to always start your triangles right at the end of a motive wave. It just doesn't always work. Sometimes that triangle is offset from the end of the incoming trend. Anyway, let's keep going here. So this is a leading diagonal triangle, and then there's a corrective wave through here, and then the push out. And we didn't really get that far, did we? Did we even get to the 50% extension? That's where we got it. That's kind of a weird place to have that extension land, I'm not going to lie. It's very interesting to me to see that. If anything, finding reversal of this downtrend after hitting that level is not necessarily bullish, but it does say that the bears didn't have the momentum, the strength to push any lower, right? I'm going to keep an eye on that. Got to keep an eye on that because this happens a lot where you get these zigzags forming and then they just stop. And as soon as that trend breaks, it's probably a good idea to look for some other level of extension, like 50% makes sense. And then watch for the development of a larger wave pattern like this. Interesting stuff. Interesting stuff. So this is probably an ABC building into wave A. And the first impulse here was leading diagonal triangle. And then we had a reactionary trend. And then we had another reactionary trend. This moved down, retraced. I wonder if we can run a Fibonacci retracement through here, if that would benefit us at all. Let's see. Gonna go there to there, there to there. And, you know, it kind of looks like that's the 50% retracement, right? That's uncanny. Let's extend that to the right. Look at that. That's exactly at that 50% retracement. So, okay. Let's talk about this. This would have been the perfect analysis at this time. It would have been to first, of course, see the big motive wave up, and then after reversing out of that uptrend, saying that, hey, what follows is a reactionary trend, and so you're looking for wave A. And as you're looking for wave A, we could have speculated that we were forming this leading diagonal triangle as early as June 16th. And then we would follow this pattern as price continued to bounce around, break out and up to the upside, and then quickly reverse. And as soon as this, we would have been bullish for, well, we wouldn't have been bullish at all. We would have been waiting for a confirmation push above that high. Breaking above that 2490 level right here, this would have signaled bullish reversal. We hit that level, corrected it, and then actually set a new low, which completely threw the bullish case out the window there. When we find that low, we would be then looking for a continuation. Of course, we got correction and pushed higher back up to that bullish reversal level at 2490. Price began to push down again, and we wouldn't have bullish or bearish confirmation until 2375. Price fell below there, confirmed that downtrend, and then corrected again. Back tested the new downtrend. Let's see here. When did this trend form? Right there. Okay. And then we would have drawn this, and we would have followed this trend line, which quickly became internal. You can see how the price broke that downtrend, but in every instance that it didn't make a confirming move. Just pushing out past the downtrend is not enough. You have to set another high after correcting the impulse that pushed above the downtrend, and that just didn't happen in any of these cases. Maybe this one you could call, but not really. Really, this is a very small time frame, A, B, and C. Looking for the next wave to push out above there. Didn't happen. Instead, we get the end of a motive wave. 1, 2, 3, 4, 5. Motive down. And this would probably complete a motive wave count through here. And as soon as we came to this low at 2375, this would have been pushed out this way. You can see that this new low pushes that trend up to these peaks. And then you can see that this changes the way that these attempted breakouts look as well. And seeing this motive wave here is actually really informative, because what it does is it tells us that motive is still down. Of course, it stops right there. This is the last motive wave in this big push. This is probably one. Let's look at this really quickly. It's probably A, B, C, or A, B, C. No. We're going to be talking about A, B, and C. This is the corrective wave right here. Okay. So what's this? This is wave extension of one of these waves from the leading diagonal. Crazy. And it might even be A, B, and C. It's tough when you get these funky patterns, right? Let's talk about funky patterns. There you go. A, B. This is a B wave. Hey, look at that. Look at that. So here's the low. And of course, the triangle starts offset from that low, which we'll call 5. There you go. Triangle. 1, 2, 3, 4. We didn't really get touch point 5, did we? Nope. price kept pushing lower, and so we started motive wave count. I don't know, probably right. This can't be wave 1 because it retraces, wave 4 retraces into it, or we go into a third wave extension. So 1, 2, 1, 2. We can't just keep going 1, 2, can we? Because then we have to go 3, 3, 3, 4, 5. It's like that breaks down pretty quickly. 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. There could be a couple of 5 waves ending down here. Curious to me, curious, very curious. This is a leading diagonal triangle. This is probably just a zigzag through here. Probably just a zigzag. Let's see. Gonna take this to there. 100% at 23.24. So this is probably just an A, B, and then this is a C wave through here, where we have 1, 2, 3, 4, maybe 5. Not quite. Not quite. I want to say that this is a 4 wave right here, and this is that last impulse 5. So 5, 4. This must be 3. All of this must be 3 through here. So 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. That's how that works. Complicated stuff. Very complicated stuff. And if this is 5, 4, and 3, this could be 2, and this could be 1. So the impulse actually starts right here, right off of the back test of that triangle target. You see there's a little breakout from this pennant, comes up, and then we start motive wave 1, 2, 3, 4, 5. Cool. So it makes sense. It does make sense. And there's a lot of lines on the chart right now. So if you're following along, that's great. It's a lot of lines. It's a ton of lines. Should I label it? Probably. Let's go ahead and do it. Let's do it. Let's take off some of these targets and downtrends. And I'm going to leave those price levels there for just a moment. And then this, let's see, the 3 wave through here. This is going to be my smallest wave degree. For 1, sharp 2. Oh yeah, 1, 2, 3, 4, and 5. Wow, this could be 4 and 5. Crazy stuff. 1, 2, 1, 2, 3. Okay, I have to count like a wave degree smaller. 1, 2. So this is 1, 2, 3, 4, 5. That's 3. So we must have wave 4 here, and then this has to be wave 5. I bet you that there's a bullish divergence between that waves 3 and 5 at the sub-minuet degree level. Let's see here. Oh wait, there's not. So wave 3 might end even sooner than I thought. Because you see, let's see here, lower low, lower low, lower low, lower low. Where's the first like bullish divergence? It's right here, but it's possible. This is 5, 4, 3, 2, 1. This is a 3 wave within the 3 wave. 1, 2, 1, 2, 3, 3, 3, 3, 3, 4, 3, 5, 5, 3, 3. Damn, I'm gonna have to take a moment here. Really, really, really stare at this chart, like really good. 1, 2, 3. It's possible that this 3 wave looks like 3 waves on this time frame. If I zoom in, I bet you I can finagle a motive wave count through here. I bet you I can do that. And this is 4 and 5, and that completes 3. We're gonna edit this and then duplicate this. Call this 4. Duplicate it again down here and call this 5. Yep, I like it. And that makes this 1, 2, 3, 4, and 5. Okay. Whoops. You can see how like crowded the chart gets when I zoom out too much. Got a motive wave count through here for 3. So we can duplicate this thing back here and say this is the top of wave 2. We'll get rid of one of those. There we go. And then duplicate this and say this is 1. Okay. 1, 2, 3, 4, and 5. Of course, now I have an overlap between waves 1 and 4. No! So frustrating. So frustrating through here. That motive wave count doesn't actually work. Because this wave 1, is it possible that this is another somehow... No, there's not another like diagonal or reverse diagonal through here, I don't think. This is annoying, get rid of that. So how are we gonna do this? How are we gonna get wave 1 here to agree with that rule that the 4th wave does not overlap the 5th wave? What if the wave degrees are wrong and this is actually 3, 4, 5. The problem is these 2 wave degrees, this must be 1, 2. It has to be 1, 2, and then 1, 2, 3, 4, 5, 4, 5. Yep, that's it. That's it. It keeps changing, right? But that's how you have to do this count. This is A, B, and C. And then we didn't get that 5th touch point, so it's actually not a pennant. Wow, that's annoying. But it's not. There's not a 5th touch point. Crazy. As soon as you fail to reach the other side of the pattern, start looking for that motive wave heading lower in that correction wave. Okay. I'm going to have like a few wave extensions in here. This is actually 1 degree too low. Yeah, is this confusing anybody yet? This is what it's like to stare at charts for hours. Duplicate this, but we are going to get a correct motive wave count through here. It's just a matter of time. 1, 2, and then we've got 1, 2, maybe. Yep. Ooh, that changes that. Ooh, exciting, exciting. We're gonna start a new motive weight count through here. 1, 2. This is probably 3, 4, 5, right? And then we get like some sort of bullish divergence right here. Yep, this is probably the beginning of 1 at the minuet degree. And here's our bullish divergence. I need to zoom in, don't I? This is too far out. Right there, we get a lower low in the in the price, make it green, and then we get a higher low on the RSI, and it's right over that oversold level. Very nice. So probably 1, and then let's see. I need to get wave 2 going. Duplicate for 2. That happens in a 3 wave form, obviously A, B, and C. Very nice. And that corrects this wave degree. Sometimes I don't do that right. Let's go A, duplicate down here for B. Pull this up for C. Nice. Okay, and then we start a 3rd wave extension. 1, 2. This still isn't high enough, right? Because 1, 2, and then I have all of this. There's a 3 wave through here that extends, right? I think that's the 3 wave. 1, 2, 3, 4, and 5, and it actually ends right here. Okay, and if that's 3, I can duplicate this, pull it down here, say that's where the 3 wave ended. And then wave 4 totally comes up into wave 1. Oh no, it doesn't. Not the minute degree. So I need to finish wave 3 and get wave 4 in. Duplicate. Come down here. Okay, this is how we're going to do it. We're going to use that rule, figure out what the missing, it's like algebra. Solve for wave 3. 1, 2, 1, 2. Let's see. Right here, we've got 2 peaks. This could be 1, 2, not 3 though. 1, 2, 3, 4, 5, 4, 5. I just really like this as a motive wave. Oh, hey, look at that. What if it's actually like, I think it's called a running flat. Let's look it up. Sometimes I have a hard time knowing what the flats are called. There's like a bunch of names for the flats. And it just depends how far they do or don't go. Let's see. Where wave B exceeds the beginning of wave A, and then C fails to rise above the top of wave A. That's definitely what I'm looking at. That's figure 140 on page 48. That's literally what I do. It's literally what I do. And this is the corrective wave that is, it's tricky because I don't think most people know about it. But what's it called? What's it called? I gotta just look for the reference in the book, and then okay, I'll figure it out later, but you know, it's right here on page 46. Yep. I think I'm gonna find it right now. Let's see. I gotta get the termination right here. Oh, it's page 48. Okay, whatever. It's there. It's this thing right here where you get up, new low, not new high. This is like one of the most confusing corrective patterns ever. Very, 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 very confusing. But it's very useful to know because now I can say that 1 and 2 are up here. And then we can go 3, 4, 5, 4 at the minute wave. See how that works? 1, A, B, and C for 2. 1, 2, 3, 4, 5. That gives me that. This is the motive wave I just solved for right here. Just solved for this motive wave. And I wonder if my extension tool would have worked there for a target. Yep, it would have. Would have. Oh, and is that really the start of 1? I think so. What if this is the beginning of wave 1? Still works. Okay, cool. Nice. We did it. 1, 2, 3, 4, 5, and then 4, 5, and then 4 at the minute level before we find 5 at the minute level as well. Perfect. Very good. So I should have started probably at the intermediate degree. Yes. Let's zoom out and figure out what wave degree I'm supposed to be on. Because we just said that it was the minute degree that formed. This is a minute degree motive wave through here that stops early, falls short of the zigzag target. A, B, and C. And get rid of that. And this is actually going to be C now. And then above it, this completes the intermediate wave A. What? Ta-da! Duplicate this, pull this back here, edit this. A, B, and C. Whoops, that's totally wrong. What am I doing here? This is at the wrong wave degree. That's what I'm doing wrong here. Duplicate. Brain fart. A. There it is. Okay, now it's making sense again. A, B, and C. Minute waves 5. So minute waves extending there. Good, 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 good. Yes, there it is. And then actually these are probably minute waves over here. Just going to color them correctly. It's not like super important. I mean, it's all conceptual, right? But if you don't get your degrees right, then when you go into labeling like what your retracements are, you might measure to the wrong level. Don't want to do that. Nope. Duplicate. 1, 2. And it's like, do you really have to go this far back to analyze the present? Yeah. Yeah, you do. You really do. 3. You need at least 3 degrees. So getting 4 degrees down feels really good. This is going to be a good analysis. I'll be able to follow this analysis for a while because of the number of degrees that are used in it. And should I just count this as 5? No. 5 is back here, and this is that weird correction, which we saw reiterated later on. Something else to note there, too, is that the reiterations when you see the chart patterns like repeating themselves, like a lot of people do this, they'll see the chart patterns repeating themselves and they'll just like copy and paste a part of the chart and be like, this is what happened last time. And it's like, well, that might actually work in wave extensions where here we get, cat wants to come cuddle. We get A, B, and C. You see how that forms there through here? We get like, let's see, is this it? A, B, and C. Yeah, that's weird. Down, A comes up, B, and C. This one is especially weird because A is small, B is big, and then C takes forever, right? And that's what's giving us this weird triangle shape. But we also saw that back here, right? Where we get A, B sets a low, C takes longer, doesn't set a new high. And that happens at the subminuet degree. So how many wave degrees are there between the subminuet degree and then the, let's see here, these would be minute waves forming that. So that would be, I want that to be 3. I want it to be every other degree because that's how we can predict a fractal. I'm gonna have to remember that one. Remember that one for later. Anyway, A, B at the minor degree, which is composed of minute waves, A, B, and C, and then we get 1, 2, and 3. And at the subminuet level, we get a reiteration of this correction. Anyway, price pushes lower, only reaches the 50% level. So the target was actually down here. We didn't hit it before we found a reversal. And that's a good cue right there that there's a lack of downward force. So if there's a lack of downward force, we're either bullish or neutral. And here we see that neutral was actually the right choice there. So let's keep going here. Let's blow this up again. The cat wants up. Come here, cat. Come here. Get up here. Come here. Just come up here. You can do it. You do it all the time. Okay, I'll just ignore her, and then she'll like magically appear on my lap probably. So let's talk about this triangle development. This is inherently going to be a reactionary wave because we just came out of an impulse, right? A, B, and C. It could be motive, but that would be so weird. It doesn't make any progress, right? Come on, cat. There you go. She did it. This one is Halsey. She doesn't look at the camera as much. She's a little shy. Look up, cat. Look up. She's like, whatever. I want on your lap. She's going to move the mic around a bunch, so I'm just going to try to hold it. Okay. This is probably A, B, and C again, and then we're actually getting a C wave extension through here. So this chart pattern probably doesn't start till over here. Just going to do that right away, so I don't have to relabel everything later. Let's have a look here. Yes. Hello, Kitty. We're just going to duplicate this. A. Duplicate again. B. And then this is a C wave extent. Ooh, that makes us a C wave extension. Interesting. Interesting. Because if we are doing a big measured move down through here, and this B wave is kind of this actually changes the analysis. Because this looks motive. When I said this was should be corrective or reactionary, it's like, well, we start with a motive wave in every reactionary trend. And this is, oh God, it's this stupid thing again. This corrective wave goes up, right? And then it passes the start of that wave, but then when it comes back up, it doesn't pass. We were just talking about this. This is the same corrective thing. It's just upside down. How annoying. Wow. And so price just starts going sideways, and this is the C wave extension. A, B, and then it's 1, 2, 3. Looking for 4 and 5. Let's see if we can just like, I mean, why not? Does it look good on the hourly time frame? It's the real question. Yeah, it looks good on the hourly time frame. 1, 2, 3, 4, 5. Or A, B, C, D, and E. And this one's actually a running triangle because we start at the very end of the impulse. Or not a running triangle. It's, she's licking my arm. Stop. Your tongue is so rough. Fling her tail around here. Okay, well, so I think that's as much as I want to go into here right now. I'll be able to use this count for a long time, And I'm glad I did this because it means that this high over here is not part of this triangle. And this could actually be a C wave extension. And it's breaking down. A, B. Let's see what that B wave looks like. I think this is the B wave through here. But look, it extends so much. 1, 2, 3, 4, 5. Like, that's a motive wave. That's a motive wave. But we don't get back-to-back motive waves like that. Which is frustrating because it means that, oh, maybe, maybe that's our chart pattern. It starts up here, A, B, C, D, E, and we're now extending into more touch points and heading down. And then this would be like A, B, and C. Oh my goodness. Right? Where we get, this is some sort of flat through here. This could be A, B, and C too, like this, because that doesn't look very motive, does it? That three-wave form through there. Maybe it also lacks downward force and only hits like a 50% target. Let's have a look. Let's see here. We'll take off those other extensions. On the money, 2219, 50% extension, just like this other. The impulses going down are lacking strength here. That's something, right? That is something. Okay, that's important to note. Stop licking me. Yes, you're really cute. So let's go ahead and label that out too. Might as well. So this is ABC. This is also A, B, and C. Hi. I know. I'm not paying attention to you, am I? What a bummer. A, B. Duplicate this up here for C. Corrective overlap. No progress made, you know, over this three-wave form. And then we definitely have like a motive wave through here, but also this is totally A, B, and C. Is this 1? This is, so 3. 3. This is a weird one. 3. Like, it's just so small. 1, 3. Yeah, I like this better. Corrective hell. Counting meme stocks is corrective hell. Like, you get these big, huge pushes up, and then it's like, we're going to retrace almost all of that. And then we're going to make this funky A wave, correct it with a B wave, do a funky C wave, and then we're going to do some really confusing ABC, ABC. And whenever I look at, this is crazy. All through here, all I see is you get a reactionary corrective trend, right? And then you pass that, but then you don't pass it again, and you get this funky, like, sideways thing, right? It's very annoying. Anyway, okay, so GameStop, that actually is a pretty significant analysis change. That means that we're probably not doing this big ABC heading lower like I thought. It's possible, but if I count sets of 3, 1, 2, 3, 1, 2, 3, and then this is a 5, this is inherently a combination 3, 3, 5. That's actually what it is. It's actually a combination 3, 3, 5, not an ABC. So that's an update. I'll put that in today's video, and it won't matter to most people, but okay, stop licking me, please. Combination, stop. 3, 3, 5. Okay. And then let's go ahead and open the book up for a minute here. We'll figure out what that means. Yeah, cat. Maybe I'll do this later. I don't know. I don't want to have like a bunch of dead air while I'm live. So let's keep going. And we'll hit some of the other stuff that I said I would today, which involves, let's see here, SPXU, CVNA, BA, QID. Well, let's keep making the rounds really quickly so we can kind of get an idea of what else is going on in the markets. Check Tesla out for just a minute. I was speculating this morning on Twitter that we'd be moving into a pennant shape through here, that we had an initial impulse, and now we're going to be looking for corrective extension. And I'm guessing that because wave 1 is smaller than wave 3, and wave 3 is smaller than wave 5 in this impulse. So each push down is actually stronger, unlike the pushes that we see in GameStop, where we're looking for a 100% extension of wave C, but we've only got 50%, right? So GameStop might actually be kind of bullish. This might be a temporary downturn in GameStop. But anyway, in Tesla, it's looking the other way, where we've got strength pushing down, That horizontal triangle is a good common indication that we're only halfway through that corrective cycle. And this has been a big uptrend. This is a huge trend to correct, right? Like, it's huge. Like, eventually we're going to have to like draw a Fibonacci tool from that peak to this down here, and we'll have to figure out what the appropriate wave degree is to find what the retracement tendency is. Because to me this looks like an A, B, and C wave, I don't really think that we get to know where the reactionary trend retraces to, because the next wave down is probably motive, and it's probably looking for a low. It's probably looking for a low, and it'd probably mark a significant low for a very long time. And it may, if it passes, let's see, this peak right here, this is like bearish reversal at a large wave degree. Okay, that's too long. Large wave. Bearish reversal, large wave right there. And let's make it red. Okay, there we go. And so maybe we even just like assume that's the target. I mean, after all, look at this little tiny correction that we've started. We'll zoom in, enhance. And you can see that the extension is down here at 206.59, which is near that 214.66 level. How much do you want to bet we see this eventually reach these levels down here? It's not going to happen in like 2 or 3 days, I think. It might take a little longer than that, unless there's some sort of catalyst event. You're going to notice that there's a lot of like bullish divergences forming through here. But when those bullish divergences don't lead to correction, that's pretty bearish, right? We saw that on the GameStop chart as well. But you are going to notice that we had bullish divergence at the end of this 5 wave. And then again, another bullish divergence form as we push into this new pennant, right? And it's possible wave 5 is actually back here and the pennant's going to form up this way, in which case this will take longer than anticipated, or the trend line slope will be different. But this is a pretty good guess so far, I think. Took that bottom that we found earlier today, and I just said, hey, that's probably it right there. Probably the start of our pennant. We're going to move through a converging trend now on Tesla. Let's move through and talk about some other stuff as well. Let's see how SPY is doing. SPY is not necessarily my favorite thing to look at all the time because it can be very confusing. This cat has gotten into the habit of just licking my arm when I'm not petting her, and it's very annoying. It actually kind of hurts because, you know, cat tongue. And since the cat's been shaved, which you can't see, but let's draw off the kitty. Come here, cat. I know. This is the cat. She's been shaved, so all of her dander comes off much easier. Okay, let's zoom in a little bit to 15-minute time frame here on SPY. Looks like I had some corrective targets through here, and we've reached. When did I draw these? I really wish I would like timestamp this stuff, or if TD Ameritrade had that tool. Geez, I'll have to go through and maybe it was yesterday. I don't know. At any rate, we've definitely started correction, right? A, B, and C coming down here. 1, A, B, C, C. So this is like a complex measured move down, and this is some sort of reactionary trend through here. And SPY likes to do the most confusing thing it can all the time. So maybe we see something really funky. Really funky. Maybe not. But an ascending broadening wedge through here to make sense. I see overbought on the RSI, struck once here. This is probably the top of that correction. This reactionary trend through here. Let's see. Maybe we get a nice ABC wave through there as well. In which case, I'd just be saying A, B, and then C. But look, that really extended beyond there, didn't it? Oh, here's the confusion right here. C wave extension in a broadening pattern with an overthrow. The last touch point. Yep. This is why I like just absolutely want nothing to do with SPY. It's like, how are you going to be able to properly forecast this stuff? It's just insane. A maybe, B and C. I don't know. 1, 2, 1, 2. this can't be a 3 wave. 4, 5. I mean, good luck. Good luck. SPY is not my friend. Nope. Generally not. Let's go take a look now at QID. This is it's a short ETF of QQQ, it looks like. If I zoom out, it should just be like a big dump. Right. Yep. Huge dump. And percentage, maybe I can actually do a quick ABC target here and see how that looks. That looks awful. Negative price target. Don't look for negative price targets. That's not going to work. But we definitely do have A, B, and C, and maybe by percentage, those waves are similar. Waves A and C should be similar, and if you can't do that on a linear scale, do it on a percentage basis or an algorithmic. Let's see, 67.38%, and from here to here, what we got? 57. Okay, but they're comparable, right? They're comparable. I'm going to delete this, and I'm going to go ahead and delete this. This is the opposite of QQQ. And if I'm looking at A, B, and C, of course, there's going to be more price data on QQQ, but this chart at least starts with correction. Interesting, before 2020, right? Let's see, in 2020, August 2020. And as well as I was analyzing the bearish Tesla chart, that's how I was able to correctly forecast this breakout. And this is now turning into like a flag through here, like a true high and tight flag. And if that's the case, then this thing is going to be like hitting 35, testing this peak back here, right? That's SOR. Support or resistance. Support or resistance. And we'll just leave it gray because it goes either way. Yeah, to me, this really looks like we're starting to form that tilt too on that flag. Yeah. We'll get there. We'll get there. Let's go back to QID. QID. There we go. And we're going to zoom out to the daily. What do I see? Definitely A, B, and C, in which case I'm looking for wave C. This downtrend to be motive. It totally is. And it looks like we're moving through some sort of converging price trend. Doesn't it? It does. And we're breaking down below it currently, which tends to happen between the A and C line. A, B, C, D. Next touch point against this trend line is E. We're getting that. And you can see price overthrowing that. This is common for this kind of a pattern. Now, if we can establish that this is an ending or a leading diagonal triangle, then that's great. You know, honestly, though, I don't really like how much space there is along the bottom trend line here. That doesn't look good. It doesn't have the right look. In fact, what we might end up doing instead is drawing that same pattern, because this is just like a downtrend. That doesn't have to be a chart pattern trend. It's just a downtrend. But that could be 1, 2, 3, 4, and 5, and then break down. And this could be 5, maybe this could be a 3-wave form. Looks kind of motive. 3. Let's zoom in. We'll get into this for sure. 100%. Let's do it. Looks like this could be the initial impulse. 1, 2, 1, 2, 3. Can't be 4 because we've traced into that low. So it's got to be 1, 2, 1, 2, 3. Again, it can't be 1 though, because this is dumb. Annoying. Can we make this pattern bigger? I bet you we can. Right there, like that. And now when we get 1, 2, 3, 4, and we get the overlap, you know what we call it? We call it a leading diagonal triangle. And sure enough, price breaks down. So this is actually A, B, and C, where A starts probably here, B ends there, and then that's C right there. Of course, we don't... Wow, $7. Can you imagine if this thing fell at $7? That means QQQ would explode. Very interesting. Let's see if we have the correct waveform between opposing trendline touches. That's our next check, right? Here we have 1, 2, 3, 1, 2, 3. That looks like 5, but 3. We don't get the touch points though. This isn't a good analysis. See, this one doesn't work either. But we do have a challenge because there is definitely some overlapping It's going to be 1, 2, 1, 2. Unless we call this the beginning and this. Here we go. Let's talk about it. It's the end of the initial impulse, right? 1, 2, 3. Little pull up and for 4 and 5. And that actually makes that the bottom of the impulse, not this, because this is actually a corrective wave of some degree. And we'll just use intermediate. Let's see. I'm going to edit this and we'll make it blue. Pull it down and duplicate and bring this up. A. And then B has 3, or I'm sorry. A pulls up away from that trend. And then B is down. Okay, I'm going to kick you off, Cat. I'm going to kick you off if you don't settle down. A, B, C. And then we get like this weird, we're going to have to zoom in. Is that less than a year ago? Into the hourly chart we go. Let's pull up a year's worth of data. Let's get back there. Figure it out. What is this thing? Because it is really annoying. Definitely got wave 5 ending back here. That's and then overlap. That's the overlap right there. Can the impulse end? Can this be? I mean, you see this, right? Look at that. What is that? It can't really, that's not really what a motive wave looks like. Not even what the end of a motive wave looks like. Unless it's 4 and 5, 3. 1, 2, 3. 4 is flat. 5 is really truncated. Yeah, that's definitely 5. A. And then what happens here? Oh my goodness. A, B, C, D, and E. But we break down? This would be on a smaller wave degree. This would be A, and then a reverse B. And then we didn't get C. Oh, wait. Yeah, we did. Wait for it. It's right here. There is a reverse. A big reverse. Going back out to the daily. Here we go. This is a diamond, probably. I don't know. Thing looks weird. Looks so weird. Can that be the case? And then C. A, B. That's a C wave. That's a C wave. Okay? I'm just going to label it that way. The end of that impulse is right there. Duplicate this. We're going to change that A to a 1. 1, A, and then 1, 2, and 3 for B, and then C is 5. 1, 2, 3, 4, 5. It's possible that wave had extended, right? But that makes sense to me. This is how I'm going to do it. And what that does is it gives me it omits the overlap between the bottom of wave B and this retracement here, because then I can say waves 1, duplicate for 2. We'll look for that extension target for wave 3. $161.8. 1, 2, 3. This could be 4, 5, or it's just a part of a smaller degree. Of course, that could be the case. Of course, that could be the case. This might be 3 down here. But we'll see, because this correction here is flat. So we're going to zoom back out. We're going to try to get our wave degrees here, our corrective waveforms figured out. Sharp. And then we come down. 1. A, B, and C. 2. 1, 2. Sharp. Sharp. This is the sharp. This is the sharp. This is the sharp. Looking for a series of flat corrections then to juxtapose to those sharps, and that'll kind of help us figure out where our corrective waves are. So this guy is pretty flat. It's not super sharp, right? Through here. Can I draw this? Can I zoom in? I need to zoom in. I'm trying to get out of the habit of like really squinting at the screen. That's not a sharp. That's a sideways. There's one. And then here's another one down here. Maybe that actually looks like this. And then we're looking for one more. Can this be a flat? Is that a flat or a sharp? I don't know. I guess it's not really a sharp, right? We got sharp, sharp, sideways, sideways, sideways. So yeah, that works. Okay. 1, 2, 1, 2, 3, 4, 5, 4, 1, 2, 1, 2, 1, 2, 3, 4. This is probably 4 and 5, ending the third wave of this. It's probably 1, 2, 3. We probably come up, and then we probably test lows before we break out. But I think we are ending this cycle here. 1, 2, 1, 2, 3, 4, 5. And that ends wave 3 of... Okay, here we go. You ready for this? We're going to start this third wave extension. So we're going to bump it down a wave degree. Okay. 1. Duplicate this, and then we don't even have the overlap problem anymore. 2. And then duplicate 1, 2. Do you see how we have 2 consecutive matching corrective trend forms, probably extending this minor wave into an extension at the minute degree. 1, 2. This is probably all 3. I bet you this is 3. Let's get that bullish divergence going between the third and the fifth wave. Here it is. It's right here. Found it. Okay. This would suggest that QQQ is topping, hasn't quite finished topping yet. We're going to edit this into 3. That makes 4 right here. Can I get 4? And this is a sharp A, B, and C. Very small. And then 5. And that completes 3 at the intermediate level. That was a huge extension. Huge extension. And then we're looking for correction into 4. And then 5. And 2 here is sharp. You see A, B, and C. Oh, actually, I mean, it is sharp. It's like, it would have been a flat, but then wave C was like sharp as get out. So we're going to look for a sideways correction here. And then 5. Woo! We did it. We did it. The thing is wave 4 tends to reach into the second wave of the wave that extended, which would be like way up here. Like wave 4 could come way up here. And that would be a super sharp thing. In which case, I'd be looking at this again and asking if this is really sharp. And I mean, on some degree it is. On some other degree though, it really is sharp. It's gotta be a sharp. Makes me wonder. Probably not gonna do that tendency of retracing to that extension then. We're probably gonna stay low and then get wave 5 going. And wave 5 is probably gonna be proportional by percentage to wave 1, which was 20%. Wow, that's huge. Let's see here. Let's just take 20% from the bottom of wave 3. Right there. So this might be the amplitude of our fifth wave coming down. And there's always, and I'm just going to use the bottom of wave 3 there as support and resistance. It's common that wave 5 truncates or ends right there. And so wave 4 might come up to 15 here. And some sort of sideways correction. Again, whenever I draw the lines, it's just conceptual. Don't get too carried away with it. And then we'll get wave 5 coming down. And maybe it ends in some weird diagonal. Probably an end. If we get a diagonal, there'll be an ending diagonal triangle. And then we'll be calling out some sort of like ascending or descending triangle through here. Anyway, there you go. That's kind of what I think about QID. It looks like we really could come up and then sideways, finish our motive wave count down, and then we'll see if we're in a bear market or not. That's what I got. That was hard. That was a hard one. Because, you know, you're always somewhere in the middle of a wave count. It's never like so clean that you can just pick it up and it's like, oh, look, we're at the end of this wave here. And so we just do this. And then it's like, you know what's going on right away. It's possible, too, that this is 1, 2, 3, 4. And we're actually looking at a fifth wave extension. If this is the fifth wave extension, alternate 5. If this is the end of the fifth wave and it's extended, then the retracement will be crazy. It'll come all the way back up here towards $20, like a severe crash, right? So I can see two things here. I'm basically neutral to bullish here. Neutral to bullish. What is it? It's July 21st. Of course, we get bearish continuation at 12:16, so that's what we'll label it, bearish continuation. And we're really close to that level, right? But it really does look like we're going to come up here for corrective bounce. Again, bullish divergences typically signal corrective bounces. That's because it forms between 3 and 5 of complete motive wave counts. We did it! We got QID down! Wow! What's next? I told Stock Ed I would look at Boeing. Let's go ahead and open Boeing up. Oh, I have done some analysis here. But probably not really. Probably not really. Wow, Boeing. Look at Boeing go. Okay, so this is a pretty bullish chart. It really is. Zoom in here. Going way back where. This is the ultimate low right here. Way back in 1987 towards $7. Whew. Man, that's crazy. 1, ABC for 2. And then we have a wave 3. Let's just drop the extension tool. See if it'll tell us where the top of 3 is. This is probably 3. 4. Perfect. Doesn't overlap top of 1 back there. And then wave 5 happens in some stupid triangle pattern. Hate that. It happens though. RSI reaches overbought. Guess what? Big bearish divergence here. Look at that higher high over like 4 years, right? And then of course the RSI back here doesn't reach oversold, and that's really important. Don't let it reach oversold. It's actually kind of weird to see it. You don't really want to be calling it too often if you get down towards oversold. But here we'll take it because we obviously get our A, B, and C correction going down. And I don't think that'll actually be a clean ABC. Yeah, the targets don't make any sense. Instead, we get one of these guys. Craziness. Was this really our correction? 1, 2, 3, 4. You don't really get 5 touch points though, right? So we're going to resist the temptation to label it as a diagonal. It's really easy to do when you get a downtrend and there's a couple of dips to put that down, but what you really need is that 5th point to come in. We didn't get that 5th point. But what this does do is this tells us that we probably have 1, 2, 3, 4, 5, A, B, and C, zigzag. And then this would be wave 5. And then we'd have, what's this? Like, definitely corrective. Definitely corrective. But it's definitely a motive wave. Let's see here. Let's take that divergence line. That looks interesting. And that looks very interesting. And here we have 5 touch points. There we go. 1, 2, 3, 4, 5. Nailed it. And through here, I bet you we actually have a series of alternating 5s and 3 waves. This could be 1, 2. Can this be this one has to be corrective. Yep, because the peak of 1 here is overtraced in 2000. So it's ABC, ABC, ABC. This is actually horizontal. And then we get, this is like so motive. How do you do that? Let's zoom in a little bit. Let's take it down to the weekly time frame. Maybe this will clear it up a little bit for us. This is the chart pattern in question. Maybe it just got a lot smaller through here. That could be it. A, B, C. Wow, that's a weird waveform. And then A, B, and C. But again, we're looking for the opposing trendline touches. This really could just be an extreme through here in 1998. It does form a large double bottom, right? This could be easily, let's see, 1, 2, and then 1, 2, 3, 4, 5. This could be motive down to this point. So we can say motive wave to there, and then corrective 1, 2, 3. And then again, 1 down, 2, 3, 4, 5. I mean, do we really want to do that? 1, 2, 1. This can't, 1 is way up here. 1, 2, 3, 4, 5. That's a funny looking motive wave. It fits the rules, but it just looks like a zigzag. And maybe it is a zigzag. It's like the look of a wave can matter a lot, but you know, these targets don't work out because this thing swings around so much. So like on a linear chart, this definitely doesn't make any sense. What I actually really want to do is connect these trend lines together, I think. And if it's backwards, then we want to offset it, right? From that high. So offset and then overthrow at E. But then let's see here. E, D, nope. It's got to be even more complicated than that. It's got to be even more complicated. Let's see here. I'm going to stare at this chart for a while. This makes sense. There it is. It's coming into focus. It's coming into focus. Yep. That's it right there. Okay. Now let's zoom back out and let's figure it out again. 1, 2. Could it be like 1, 2, 3, 4, and then 1, 2, 3, 4, 5? This could be 5 through here. This could be a 5 wave ending in some weird triangle shape. We'd be labeling it like reverse ending diagonal then. So we're looking for waves of 3. Let's see here. 1, 2, 1, 2, 3, 1, 2, 3. I don't know, maybe 1, 2, 3, 1, 2, 3. This could be characterized a couple of different ways. This would have been a very hard time to analyze this. A, B, C, D, E. No. A, B, C. No. We want this to be E up here because of the overthrow, right? We want E, D, C, B, and A. Don't start there. Start here. Magnet to that point, pull this down to there. And now we've got 1, 2, 3, 1, 2, 3, and then 1, 2, and 3. And E overthrows hard, and then reverses hard and pushes down for A, B, and C. And so we can actually say that this correction here is a sharp after a complete motive wave of 5. Let's check the uptrend. Ooh, interesting uptrend break through there. Let's go ahead and put that down. Interesting. Very interesting. Let's see if we can't do something with that. Zoom in. Take a peek. It's channeling. It looks like a channel. Doesn't look like it's converging there much. Yeah, and wave 4 breaks the uptrend. That happens a lot. And then wave 5. This is all 4. This is all 4 through here. This is much easier than I thought. It's A, B, and C, 5. And then we really want to, it's very tempting to be like, well, A, B, C, D, E maybe? Ooh. Very tempting to put a triangle through there as well. I would resist it, but it just looks so good, doesn't it? Let's zoom in on it. So let's just like say that, let's go out again. We had waves 1. The reason why I'm putting wave 1 through here is because this low is lower than the IPO. So 1, 2, 3, 4, extension, 5, A, B, C, B, C. Okay. And so this is 1, 2 again. And then we go into a third wave extension. So I'm gonna start labeling this. And we're just gonna put it up at the cycle degree because that's easy. 1, 2, and then we start primary 1 of cycle wave 3. Let's see here. Primary wave, primary wave, primary wave. It's gonna be a Roman numeral, and this one's gonna have a circle. And then I make this one white because it's below cycle, which is yellow. Duplicate and make this 2008. Correction. And then 3 tosses the price much higher. Let's go through this. 3. I'm going to try an extension tool there. It's a little daring because it's a huge price range, so bear with me here. This might look crazy, but... Oh. Maybe this is the top of wave 3. Wave 2 was sharp, so wave 4 would be flat. And that kind of looks like a flat correction through here, right? Up through 2016. So maybe I just label that as wave 4. And that will work out nicely. And wave 5 pushes up higher. Duplicate. Make it wave 5. Peaking in 2018. Wow. Who'd have thunk it? And let's see. Yep, wave 3 got its own channel. That makes sense. Whoops, this one. Wave 4 broke the channel. Makes sense. And then wave 5 was just like tremendous. Like extended. Wow. Amazing. And then within wave 3, we have 1, 2, 3, 4, 5. Correction. 1, 2, 3, 4, 5. Double 3. That's not a wave 3. Let's look at our motive wave count through here. Bring it up. Pull down the RSI a little bit. 1, 2. Maybe 1, 2, 3, 4, 5. 3 ends right up here. Yeah, that works. Why not? Looks good. Let's see. Where's the bearish divergence? Right here. Yep. This would be at the extension 3 and 5, completing 3. And there's your bearish divergence. Okay, cool. I like it. I like that count. I like it a lot. And let's see. In that corrective count, wave 2 then has to be like a sideways, A, B, and C. Yep. And then this would be a zigzag. Let's do a zigzag target here. See how that looks. Looks pretty good, actually. Zoom in on it. Blow it up. Make sure it really makes sense. Go like this. This. Yeah, right around there. Okay. Characteristically, I think that's good. We came up, we peaked at wave 5. And now we've seen wave A. Massive surge lower at COVID, of course. COVID crisis sent a lot of stocks into correction, 100%. And then we had wave B, which through here starts with wave A. What a weird pattern. Let's see here. One, 2, 3, 4. Didn't get 5. Can't do it. Can't do it. Nope. Not gonna work. So A, possibly B and C. Are we done correcting? Oh, did we finish correcting? That's hard to say. Typically, we get oversold hit once at the end of corrective cycles, once at the top of a corrective cycle, once. This is probably A, B, and C right through here. I'm sure what everyone's doing is drawing this big triangle through here, right? I don't like it. I don't like it. The downtrend break is totally valid right through here. That's a good downtrend to watch for sure. But I don't think that we can connect these lows like that. I think really it's an A, B, and C wave. Duplicate. B. Duplicate for C. Okay. And let's have a look back here. There's a bullish divergence that forms between these two lows and the RSI. So I don't think it's typical to see that between waves C and 1. And so this is probably where wave C ends, actually, is out here. Right? Wave C is 5, 3, and 5. There you go. So what we're looking at is actually impulse 1 and 2, and then correction for 2. Zooming to the daily time frame, that gives me a lot to work with. We've obviously got a double bottom through here with a handle, so we'll just go ahead to Volkowski's chart pattern analysis, and we'll look at that. Go to patternsite.com. Chart patterns. Let's talk about double bottoms. What kind of double bottom is it? Let's see here. I need it on this screen, not on that screen. This looks like an Eve, maybe? An Eve and Adam. Eve and Adam double bottom. Let's go to, is it under Eve or is it under double bottom? Double bottoms, Adam and Eve. Yes, that's the one. And we'll come down here, we'll look at the stats, and we'll put that on the chart. We'll put a price target down. Yep, Adam and Eve, great. Downward price trend, got it. Two distinct valleys that look different, got it. Peak. The rise between bottoms, at least 10%. Oh, okay. Let's go check that. That's definitely going to be more than 10%, right? From here to here. Like, it's way more than 10%. And let's see here. The price variation between the bottom is small. The two values should appear. Bottom, yep, they do on the weekly. The average separation between bottoms is almost 2 months. We definitely have that as well, right? This was in June, and this was in October. Wow, pretty big. Pretty big. In fact, we might have a bigger double bottom through here. There's a lot of double bottoms, a lot of types, and one of them is like the big W. We'll have a look at that one too. Of course, the pattern confirms as we pass that intervening peak. The measure rule, we're just going to take the height of the pattern, and then we're going to multiply the percentage being price target above, and then add it to the breakout price. Cool. Big W, here it is. Look for a double bottom with a tall left side, one with a steep decline, and few or no price consolidations along the way. That sounds like, well, I don't know. Could this be a big W through here? I guess so. Yeah, like that's a pretty straight run from that last trend line touch to that low. So very possible, very possible. He says, expect price to return to near where the downtrend began. Wow. Okay. Wait for confirmation on these guys. There's a 48% chance the price will continue lower, whatever. Sometimes price will confirm the double bottom, then waffle up and down, forming a handle. Definitely what we're looking at too. When price breaks out of this region, it often moves up in a strong trend. See the chart to the right. Let's see. Yearly high, volume, throwbacks. This is what we're looking at right here. Big push higher after we broke out of the handle. Little handle. I want to go look at the big W really quick, and then we'll hop back into the chart pattern analysis. What's the time frame for this thing? Tall sides, Oh, wow. Rise between the bottoms, it was like a lot more than 20%. Volume receipts. Let's look at volume really quick. What's volume doing here? Yeah, we could say it's receding through between the two bottoms for sure. Definitely. You can see the yellow line. That's a 30-period average. The reason why I do that is because it's hard to tell with all the volume spikes what's really going on. So that average helps kind of consolidate that, make it a little clearer. Do we have a time frame for this? Maybe there's some discussion here. I mean, that looks good too, right? A symmetrical triangle there. Curious. I thought that this was like supposed to be found on like a large time frame. We're going to use the 74% percentage mean price target though. We're going to go with this one. We're going to go with the big W. Let's do that analysis now. Okay, so we have our bottoms, we have this massive rise, and we've definitely got a handle through here, and we're expecting a strong push out of there, and that's because it's wave 3 of a new motive wave. We finished a wave count C through here, and that double bottoms formed at the end of that corrective phase. Naturally, price did confirm and then came back up to where that trend started. We're gonna go ahead and do the percentage mean price target for this guy, and then we're going to do the Elliott wave analysis for the impulse that we're expecting here. Crazy stuff. This looks so bullish. It's kind of fun to look at bullish charts. Okay, so let's see. I used to measure this wrong. So the measure rule, compute the height from the highest peak to the lowest valley. Highest peak, look, peak to valley. Okay. And then add the result to the price of D. Really? Wow. That's going to be a huge rally. We're gonna use the percentage mean price target though, because that's more safe. He's basically saying measure, let's see, we'll magnet these extremes and then just add that. So right here, and then we're gonna add it to that. So this is 102.72. Let's open the calculator up. 102.72, and we're going to add that to, oh my goodness, 172.08. Boeing coming all the way back up to 274. Is that a new all-time high?